Good morning. Welcome to another edition of the pre-market PulseScan with yours truly, Dex the Algo Capitalist, aka the Vulcan, coming to you live from PulseWaveTrading.com, home of the world famous PulseWave price trigger reports that we put in your hands. That's right, we put it in your hands each and every trading day. And there is the opening bell right on time here. Yep, I'm a little late today because this is our week, ladies and gentlemen, that we roll out the new stuff. So I will be in the lab working overtime. I wanted to get it out Sunday night, but have a few finishing touches we need to do first. So not ready to go there just yet, but we are getting there. So this is our week. We're gonna roll it out. We're gonna make it do what it do. Yada yada yada. Bada boom, bada bing, all that good stuff. Hopefully everyone had a great weekend and that you were able to relax and decompress from all of the negative news out there. You know what I'm saying? It's a new week though. So what happened? Well, we came into today with no deal, no extension. All right. So the eviction and foreclosure thing went on and expired along with the $600 a week. So yeah, that kind of hurting a lot of people, man, hurting a lot of people. And they're like, look, that $200 thing that you guys was trying to throw at us is just not enough. We need more of the government dole if we're going to make it. All right. We got mad millions of jobs out of here that have just went up in flames. And the American people are saying, we need you to bail out the American people now. After all these years of bailing out big business, now it's time to bail us out. We need big business to bail us out. Okay. So this is where we are this morning. That's right. This morning. This is where we are this morning. And it's not looking very nice, as you already know. We've been covering things. We've been talking about all these different aspects of what's going on, not just from, the mainstream media sock puppet things, talking points. Nah. Right now, that's what we're dealing with. We're dealing with the situation of another lockdown, a 2.0 of the virus, and I don't know. I just don't. I don't know. I don't know what to tell you. We're just here. Well, this is just where we are, and we have to deal with all the different aspects of where we are. a lot of this is going to, shock a lot of people because there's so much going on, and there's so many unintended consequences as a result of what's going on. Not to be too crude here, but let's just break it down. Okay, so if a person decides they're going to commit suicide and they're going to leap off of the Empire State Building, right? We know that is a tragedy. Okay, so the person did what they accomplished what they wanted to accomplish. They went ahead and they committed suicide, right? Which is a sad, devastating thing for any human being to do. But what are the residual effects of this person jumping off the Empire State Building? See, it's not the fact that they just committed suicide, but there are consequences and ramifications and repercussions that go along with that, and unintended consequences. For one thing, suicide is a selfish act. I didn't say selfless, I said selfish. So one of the consequences and repercussions of that body hitting the ground is that those individuals that love that individual, friends and family that love this individual, are now going to have their lives turned upside down and rocked and devastated because of this enormous loss. But what are some of the not so visible consequences? Those are the obvious consequences. When the body hits the ground, all the loved ones take a massive loss that takes at minimum a year just to go through the grieving process. All right. So we already know those are the immediate effects, but what about the long-term effects and the unintended consequences, cause and effect of that one act? Let's break it down. From the moment the body hits the ground, we now have an emergency situation that has happened. Now, that's assuming the body just hits the ground. What if the person falls on top of a passerby? Now you have 2 deaths instead of 1. What if it falls on top of a pregnant woman? Now you have 3 deaths instead of 1. What if it falls on top of a parked car? Well, guess what? Now we have residual effect, because now we have property damage along with the loss of a life. And what if there were people inside of the car? Now we have multiple deaths along with property damage and an insurance claim now on top of that. What if the body just hits the ground? Well, again, now we have more expenditures, because now law enforcement's going to have to come in and they're going to have to do their investigation. You're going to have another group of individuals to come in and clean up the crime scene. The coroner has to come in and do their thing. The mortician now at the funeral home has to do their thing. And then, burial procedures, how they're going to be laid to rest. All these things cost money and time and inconvenience, because now that part of the sidewalk's going to be shut down, or maybe that whole street will be shut down. Who knows? But there are unintended consequences from that one act. That one little act created this chain reaction of events. You see them? You see where I'm going? So what we're seeing today, the result of the shutdowns, the lockdowns, are going to have these residual effects and unintended consequences that you can't see yet. 20 years of stimulus. I want you just to think on that. We've had 20 years of stimulus, non-stop stimulus. Hundreds of trillions of dollars, maybe even a quadrillion dollars at this point, of stimulus thrown at the markets, thrown at the economy, thrown all over the place. A quadrillion dollars. The United States is not worth $1 quadrillion. If you grabbed every human being that lives in the United States, turn them upside down and shake until all their coinage fell out of their pockets, you would not collect $1 quadrillion. If you took the next step after you turned everyone upside down and shook them until their money and wallets fell out their pockets and coins, that is not $1 quadrillion. And then if you take the next step and raid everyone's safety deposit boxes, you would not come up with $1 quadrillion. If then you added in everyone's checking account and savings account and 401k and retirement accounts, you still would not have $1 quadrillion. And then if you took and sold everyone's possessions, forced, selling from the Fed, we're seizing everything you own, and then we're going to sell it, you still would not come up with $1 quadrillion. That means we have a problem. If the United States is not worth $1 quadrillion, and it owes at least $1 quadrillion, What does that tell you where we are? What's going to happen? All right. Little Scott owes Uncle Carmine and Uncle Guido, all right, the loan shark family, $1 quadrillion. He doesn't have it. And little Scotty is unemployed. They want their money. You got a phone call today that said, yo, Scotty, you need to run us our money today by noon or else. What do you think's going to happen? The or else is guaranteed 100% is going to happen. He doesn't have the money. He's unemployed. He has no savings, and he owes $1 quadrillion. He will not be walking around tomorrow. If he is still alive tomorrow, he will not be mobile. That we can guarantee. He will not be able to walk. Not one, but both legs will probably be broken, along with some thumbs, some fingers, some arms, neck, whatever. He will be in traction in an ICU somewhere if he survives. Okay? He will be broken up. And that is the theme for this morning, the breakup. The breakup is what we're seeing in a breakdown this morning, people. Let me show you something. Again, we quote from only the most intellectual minds that the world has ever seen. No, I'm not talking about Socrates or Plato. I'm talking about someone with an IQ that is literally off the charts. They can't measure his IQ. No IQ test could ever fathom the amount of intellectual capacity that this man has had. And I don't think he gets enough praise, and he doesn't get his flowers. So we're going to give him his flowers now. I'm going to quote one of the most intellectual genius minds the world's ever known, none other than Mr. Fire Marshal Bill from Living Color. Let me show you something. Taking a pic here, a little quick little peek of these overnight markets to see where we stand now that the opening bell has rung too. So far, we got the Dow futures up 121 points at 26,440. We got the NASDAQ 100 up 140 points at 11,028 and a quarter. We got the E-mini S&P 500 up 15 and a quarter at 3278 half. We got the Russell My Hustle only up 1.8 points at 1479.6. Bitcoin Futures Composite Index down 150 bucks to 11,460. Nat gas. Oh, that nat gas. Nat gas is the story today. If it wasn't the story yesterday, it is the story today. Nat gas, people. Nat gas. Nat gas is now up 19 cents. I don't think I've seen it move that much in a minute. We're trading at the $2 level this morning. We just hit $2.6, whatever. We're there, people. Now trading at $1.99. We are there after topping out at $2 this morning. We got crude oil futures up 7 cents at $40.35. We got the long bond, which is definitely not the strong bond this morning. It's down 29.30 seconds, trading at 181.12. That's 181 and 12/30 seconds. Gold down this morning, down $7.40 after topping out at $2,009.50 an ounce. Now trading at 1,979 cents an ounce. We got silver up a penny, trading at $24.23 after topping out this morning at $25.27. Can you say short-term top? Taking a look now at the U.S. dollar. It gained some strength after hitting that 92 handle. It's now trading at 93.94 after topping out this morning at 93.99 so far. All right. Now you got your euro dollar. It is down 80 pips at 117.20. Pound sterling down 93 pips at 130.15. Aussie down 64 pips at 70.83. Canadian dollar up 35 pips at 134.47. And we got the euro yen down 14 pips at 124.51. Dollar yen up 49 pips at 106.36. And your Kiwi New Zealand dollar down 48 pips at 65.76. Now, here's an interesting factoid for you. If the dollar is up, where do commodities go? They're supposed to go down. Not this morning. Beans on fire, up 5.25 points at 897.75. So far, topping out at 899.75, trying to get back above $9. We got corn up 1 at 328 even, and wheat is moving the opposite of the dollar. It's down a whopping 5.25 points at 526 even, having a problem crossing that 530 mark. Yeah, it happens, folks. It happens. Sometimes the markets get a little tired, get a little exhausted and say, I can't go no more. I can't go no more. All right, so that's where we are with the market action. Now take a look at the market news in the overnight. We got HSBC's profits diving 67% in the second quarter as COVID-19 and U.S.-China geopolitical trade risk hit the lender. HSBC reported a plunge in profits before tax of 67% in the second quarter of 2020 as COVID-19 and the stupidity of a lockdown and a period of geopolitical risk weighed on the lender. Warren Buffett's Apple stake has tripled in value to more than $100 billion. Apple is by far Buffett's biggest holding and represents around 5.7% of the tech giant's outstanding stock. The day trading boom is a welcome phenomenon and has actually helped to reduce market volatility, a veteran Wall Street trader says. At a time where day traders have been blamed for adding market volatility and falsely inflating stocks, one veteran trader thinks they have actually reduced volatility. Understand this, folks. Day traders are always the whipping boy, the excuse for anything that negative that happens in the market. All right. If the market is exploding, they blame day traders. If the market is crashing, they blame day traders for short selling. They're the whipping boy. Everyone knows that the retail specs is what you call them, retail speculators. Those are the lifeblood of any market. They add liquidity to the market. Without them, the markets would have zero liquidity. All right, so this is a straw man argument. The stock market can drop as much as 80%, a 47-year market vet explains. We're in the midst of a global bust and makes a case for $10,000 gold. David Hunter, the chief macro strategist at Contrarian Macro Advisors, isn't coy in his assessment of the prevailing economic environment. Well, I put it to you like this. There is a argument for saying what he said, that the stock market could drop 80% and gold could go to 10,000. That is a what we call relatively easy assessment in a perfect world. However, here's where he is wrong. He is wrong because he did not take into account we do not operate in a vacuum of normality. We are very abnormal. Gold has been manipulated to remain at a low price for decades now, as admitted in a court of law. Therefore, that throws the $10,000 gold scenario out the window. As far as the stock market dropping 80%, again, in a perfect world where you did not have meddling by the Fed, yeah, the stock market would have took its natural course. But because you have $250 billion thrown at the stock market over these past 20 years, that too is not happening. The chart disagrees with that assessment. Where do you see anything bearish on the chart today? You don't. You don't. And you probably won't, at least for a while. All right. A Wall Street quant chief breaks down why a COVID-19 vaccine is not the silver bullet investors have been hoping for and warns another stock market meltdown is likely. Of course, they're talking about meltdown now because we're in August. August, as I have taught you, if you have not learned anything from this broadcast, is when it sets up everything else and tells you how the rest of the year is going to go. Historically, this is the month even when commodities get real crazy, such as feeder cattle and live cattle. This is that month when they can go lock limit down 2-3 days in a row on you. Yep. It's just a seasonal thing. All right. This is a seasonal month. And it sets up if you're going to have a Rocktober or a Rock September. All right. They always say that when we start getting near the fall because that's an easy call. You got a 50-50 chance of that happening. There's a 50-50 chance of the market melting during the fall, melting down. But there's also a 50-50 chance of it melting up. People don't like talking about the melt-ups we've been having for a minute now. So it is what it is. Stocks are recovering from their coronavirus-induced lockdown losses so quickly that even several of the world's biggest investors are being proven wrong. These 16 global stocks have released a 20% upside in the next year, and they'll continue to thrive as COVID-19 accelerates a crucial technology shift. UBS says, you know the story. There's an e-commerce and work-from-home revolution happening, and it's sending certain types of tech stocks skyward. All right. 20% upside. We'll see about that. TikTok is at the heart of a wild geopolitical dogfight, which means Microsoft might buy it. The wildly popular short video app has become the subject of increasing criticism in the US due to the fact that it's owned by Chinese tech giant ByteDance, a fact which some officials and lawmakers, including Secretary of State Mike Pompeo, says make it a national security threat. Major Asian stocks are up between 0.7 and 1.1%. European stocks are up between 0.7 and 1.8%. And the U.S. is up between 0.3 and 0.9%, respectively. Earnings coming in. American International Group and Heineken second quarter earnings are due. On the economic front, the U.S. market manufacturing PMI index and U.S. total vehicle sales are due. So that is the rundown of the overnight market news. But now we got something else to talk about. All right, so what say you? There's a lot of weird things going on. Like I told you, we got unintended consequences, and we got just a whole lot of just foolishness out there. So we got a couple of things we need to talk about. Some of it is going to be a little old hat, but we got to talk about it. We got to deal with what we got to deal with, fam. It's just what we do here. For instance, we were talking about the whole day trader thing. Well, just when you thought it couldn't get crazier, traders will soon be able to buy CLOs and other risky debt products on Robinhood. You know that app that keeps crashing, especially during big market moves where people can't log into their accounts and there's no trade desk to call? Well, esoteric credit products like CDOs and CLOs gained mainstream notoriety 10 years ago as politicians, pundits, and deeply humbled Wall Street accused them of helping to nearly destroy the global economy. But a few years ago, banks started looking for new ways to package and sell safe, is the key word, high-rated CLOs and other products based on the newly ascended leveraged loans. That smells of mortgage-backed securities, doesn't it? Now, it seems lenders are facing a perfect storm with the Fed making a foray into the corporate credit market, part of the central bank's quest to make investing losses a thing of the past, at least for now, or for as long as it can. And Robinhood enabled retail traders to buy up tech stocks, Bitcoin, and gold, or at least the precious metals ETFs that offer easy exposure to gold and silver. ETF sponsors are quickly dreaming up new products to hawk to its newly invigorated generation of retail traders who understand only one thing about market dynamics: prices simply don't go down. And right now they're being proven right, aren't they? Because prices just cannot go down, or if they do pull back, they don't stay down. And with brokerages now relying on bundling retail trades and selling order flow to the big high frequency trading firms, all of Robinhood's established competitors have now adopted this business model as commissions have gone out of fashion and out the window. There's a new perverse incentive to create products that will encourage mom and pop traders to play in markets previously reserved for institutional traders. And the latest example of this comes via Janus Henderson, the $337 billion asset manager that just filed to launch a new ETF that will allow Robinhood traders to buy into the highest quality AAA rated CLOs. At this rate, retail traders will pile into this new and exciting market just as the wheels are coming off. At a time of mounting corporate defaults and deepening economic gloom, a new fund may be about to bring collateralized loan obligations to the masses. It's not enough that they blew up the mortgage markets once back in '08. Now they want to blow you up, the individual. Janus Henderson is planning a U.S. exchange traded fund that will seek floating rate exposure to the highest quality CLOs, according to a filing with the Securities and Exchange Commission this week. While many loan ETFs exist, there are currently none dedicated to CLOs. CLOs, which package and sell leveraged loans into chunks of varying risk and return, have drawn scrutiny in the past months as the coronavirus planned scamdemic spurs a wave of corporate distress. They typically don't attract retail investors, though an ETF would, in theory, make them far more accessible. Wary day traders can rest assured because the loans comprising these CLOs are among the safest and most highly rated on the market. First of all, there's no such thing as safety when it comes to trading or investing. All right, it's the idea of assumed safety, but there is no such thing as safety. All right, saying safety when it comes to investing is like saying there's a possibility that you can just be a little bit pregnant. It can't happen. All right. Now, the riskiest corners of the $700 billion CLO market may be signaling trouble, but the highest rated tier tends to be a safe space, he said. In the case of the AAA CLOs, it's a safe and low-risk asset class, said the chief investment officer. Yields are fairly low on AAA CLOs in the first place, but if investors can earn 150 to 175 basis points of spread on a short duration asset, it can be attractive. And with the Fed bent on keeping rates low until things get back to normal, this might be only the beginning. Or remember, they were expecting things to get back to normal 20 years ago. What happened to that? The central bank's intent to keep them low for the foreseeable future could mean the more than $4 trillion U.S. ETF market sees a spate of launches like the fund planned by Janus Henderson, according to the Ken Mohan at Greenwich Associates. Given that yield suppression is here to stay, it would seem you'll probably see a lot of more of this, said the senior analyst covering market structure and technology. RMBS and CBMS are probably not far off. CLOs are a cousin of collateralized debt obligations, which became notorious for their starring role in the 2008 financial crisis. There are several major differences, however, that not least the CDOs bundled loans to consume rather for businesses. But once the Fed backstop is removed, if that ever happens, the only real beneficiaries of this product will be the fund sponsors who collect the management fees and the high frequency trading firms who front run the order flow and the underlying CDOs. Now, I will say this. First of all, there's a lot to be said about this. All right, so when they start rolling out new investment products, you got to look at both sides of the spectrum on this one. All right, there are two sides to this. There's the fund manager who creates this security, and then there are those that invest and trade in them. Okay, I got to really tackle this. I want you guys to understand, because I can just nip it in the bud with one sentence, but you need to understand why I'm saying this. Okay, so there is a famous book called Fiasco, and it's about Wall Street. It's a paperback. I think it has there's some orange and gray design thing on it. It's up there with considered the mandatory reading for anyone who's getting into markets. It's up there with Reminiscence of a Stock Operator. It details the history of Wall Street creating financial products that they know is going to blow up in the customer's face. And that's where the old phrase, ripping someone's face off, comes into being. That's where that phrase comes from. If you read that book, Fiasco, about Wall Street, there are two Fiasco. There's another Fiasco book that has nothing to do with it. I'm talking about the one about trading, about Wall Street, exposing Morgan Stanley and Goldman Sachs and those guys. Now, some of you remember way back when Orange County, California, had $1 billion instrument that blew up in their face, up $1 billion, and how they use these financial instruments to bankrupt countries and stuff like that. And just you got to read the book. Trust me, you will be more than entertained. It's not just a lot of egghead theory and stuff in there. No, it's stories telling you real life stories that happen. So that's number one. Number two, that an end game is around the corner when they start rolling out new things. All right, let me give you a little bit of history on that. Okay, so you guys probably don't remember this, but right before the 2000 NASDAQ tech bubble bursted, which was a year before 9/11. Before that, there was another innovation. Stocks got changed. Instead of trading in fractions, and they said, let's do it in decimals. All right. Something that had been going on forever since the 1920s. They said, nope, now we're going to go to decimals. Because remember, this is the computing age coming into being and the internet. All right. Can't do fractions, got to do digits, got to do zeros and ones. And that's what happened. They switched it over. Right. And then that made it. Then they start saying, let's open the markets up to the world. For the most part, only the players were really involved in stocks. There was really no true volatility like we see today. There's really no true retail spec. It was like, it was a lot of investment banks and, funds of funds in there banging it out with each other every day. But for the most part, you didn't really have a lot of volatility. Remember, I told you for the longest time, McDonald's and Philip Morris, their stock prices never moved. You could look at a 10-year chart and there was no whipsaws up and down. It was just like a flat line, literally a flat line. And, they were like considered big blue chip stocks, anything blue chip that paid nice dividends. You didn't have to worry about volatility. You could just park your nest egg there and reap that income. But then all that changed with the advent of the 90s, and after the market, after they decided to go from fractions to decimals, that's when you saw the go-go 90s. The go-go 90s saw all of a sudden these new people entering the market. Why did they enter the market? Well, because they started developing new financial instruments. They didn't just change from fractions to decimals. They said, let's go from that to now new products so that we can build up the retail trading base. Okay. All right. And here's what happened. When that happened, they said, okay, we need to give them more products that they can trade. Just make this a little bit more affordable for the average person to come in. And so that's when you start getting your ETFs. If my memory serves me correct, it was 1997 when your SPY, your Spider ETF that tracks the E-mini S&P 500 futures contract, came into fruition. 1997, the now most widely held traded instrument in the planet, the SPY ETF, came into being. And right behind that was the QQQ, NASDAQ 100. All right, so these instruments came in. So you went from fractions to decimals. Then you start creating ETFs. All these new technology companies, internet companies were coming out. So people were buying these penny stocks and watching things go from a nickel to $500. Just crazy, right? Then you had these day trading firms on every corner all over the place, especially in Florida. You had all these big, you could, right next to a McDonald's, you can go to lunch and buy a Big Mac, and right next door was a day trading shop. Instead of Starbucks coffee shops, there were trading shops. All right. Some of you weren't born yet, don't know anything about that, but there were these. You could walk in, get a cup of coffee, sit down at a terminal, and day trade stocks. There was no pattern day trade rule, none of that stuff. You could go in and out of stocks all day long with $500. All you needed was $500 in your account, and you could trade as much as you wish. Sit there all day if you want to. Okay. And that's what people were doing. Some people quit their jobs, took their life savings or their inheritance that they got from grandma, said, oh, I got 200 grand. Let me go and flip this 200 to 2 million. Some people actually did that and actually had the smarts to get out of the market after they did it. But the majority of people didn't, and they didn't realize what they were doing. But this is the background that this is coming from. Because now they're targeting the Robinhood traders who they've been vilifying in the media for weeks. Now, all of a sudden, they want to bring out new instruments just for you. Instruments that are some of the most notorious ever created. These mortgage-backed securities, these collateralized debt obligations, these CLOs. Collateralized loan obligation is another nicer way to say collateralized debt obligations. What is a loan if it's not a debt? See how they like to play with words? These things are ridiculous. And I'm going to end it with this. Ladies and gentlemen, if you do get involved in trading these CLOs, I would not. I wouldn't touch it with a 10-foot pole unless there was a viable options market along with it. Not all ETFs have a viable option market. All right. Not all ETFs have option markets. They just don't. All right. And not all ETFs have inverse ETFs cousins to trade when the market is falling. So these CLOs would be devastating if there was A, no options market, and B, no inverse ETF for it. I would only say, okay, I take my hat off to you if there's an inverse ETF and if there's a options market, then I'll say go for it, have at it, do what you do. But if all they do is make a long only ETF, I'm going to say run. Do not trade this thing because it has no options market and it has no inverse ETF. So how do you short it? See what I'm saying? And people say, oh, easy. You just go ahead and hit the sell short button on your broker. No, you understand. You gotta first locate shares before you can sell naked shorts like that. And what if they put it on a do not short list? Now you're really screwed. The market's moving against you, and the only thing you can do is take the loss. You have to eat the loss. You can't move and pivot and say, okay, I'm taking a bath on this long position. However, I'm going to go ahead and keep my long position, and I'm going to go ahead and just go and buy this ETF so I can mitigate some of my losses. Or let me go ahead and buy this put so I can mitigate some of my losses. You can't do that with long-only ETFs, especially the ones that don't have pre-market trading or extended hours trading. If your ETF doesn't have any of the above, run, leave it alone. It is a default pardon the pun, waiting to happen. All right, so I warn you now, hear it now. Can't say that you didn't know what you were getting into. I just told you. This is a vehicle that is designed to blow up in your face. All right? They don't care about you. They don't love you. And if that's not enough, peep game here. They're rolling out these new products to blow up in your face, which is kind of like a backdoor bailout to Wall Street. All right? Peep this. You don't have money to trade it? Yeah, you do. The Fed is planning to send money directly to Americans in the next crisis. Did you hear me? I said the Fed is planning to send money directly to you. Help you fund that Robinhood account so you can trade these CLOs. Over the past decade, the common theme, despite the political upheaval and growing social and geopolitical instability, was that the market would keep marching higher and the Fed would continue injecting liquidity into the system, which it has already been doing for the past 20 years. The second common theme is that despite sparking unprecedented asset price inflation, price as measured across the broader economy, at least using the flawed CPI metric, will remain subdued as a reminder the Fed is desperate to ignite broad inflation, as that is the only way the countless trillions of excess debt can be eliminated, and yet it has so far failed to do so. The Fed's failure to reach its inflation target has sparked broad criticism from the economic establishment, even though, as was demonstrated back in June, deflation is now a direct function of the Fed's unconventional monetary policies, as the lower yields slide, the lower and then the propensity to spend. So in other words, the harder the Fed fights to stimulate inflation, the more deflation and more savings it spurs as a result. Incidentally, this is not the first time this discovery was made. In December, Zero Hedge wrote an article called "One Bank Makes a Stunning Discovery. The Fed's rate cuts are now deflationary." Yeah, see? Again, unintended consequences. So in short, ever since the Fed launched QE and NIRP, it has been making the situation it has been trying to fix even worse, all while blowing a massive asset price bubble. And having recently accepted that its preferred stimulus pathway has failed to boost the broader economy, the blame has fallen on how monetary policy is intermediated, specifically the way the Fed creates excess reserves, which end up at commercial banks instead of trickling down all the way to the customer level. All right, consumers are left blowing in the wind. To be in the aftermath of the COVID scam pandemic shutdowns, the Fed has tried to short circuit this process, and in conjunction with the Treasury, it has launched helicopter money, which is resulting in direct transfer of funds to U.S. corporations via PPP loans, as well as to end consumers via the emergency $600 weekly unemployment benefits, which, however, are set to expire and have expired this weekend. So now you got Congress and with the Democrats and Republicans feuding over which fiscal stimulus will be implemented next. Now, here we go. We already know that this economy was in desperate need of a massive liquidity tsunami, but it's been a tsunami that lasted 20 years. The funds created by the Fed and Treasury, now that the U.S. operates under a quasi-MMT regime, did not make their way to those who need them the most, the end consumers. Which is why we read with great interest a Bloomberg interview published on Saturday with two former central bank officials, Simon Potter, who led the Federal Reserve Bank of New York's Markets Group, i.e., he was the head of the Fed's plunge protection team for years, for those that say that no such thing exists. And Julia Corando, who spent 8 years as an economist for the Fed's Board of Governors, who are among the innovators brainstorming solutions to what has emerged as the most crucial and difficult problem facing the Fed: get money swiftly to people who need it the most in a crisis. Now, this response was striking. They too proposed creating a monetary tool that they call recession insurance bonds, which draw on some of the advances in digital payments, which will be wired instantly to Americans. Did you catch that? Digital payments, recession insurance bonds, which draw on some of the advances in digital payments, which will be wired instantly to Americans. All right. Now, as Corando explains the details, Congress will grant the Federal Reserve an additional tool for providing support, say a percent of GDP, in a lump sum that will be divided equally and distributed to households in a recession. Recession insurance bonds would be zero coupon securities, a contingent asset of households that would basically lie in wait. The trigger could be reached, all right? And let's see here, reaching the zero lower bound of interest rates, or as economist Claudia Sam has proposed, a 0.5% percentage point increase in the unemployment rate. The Fed would then activate the securities and deposit the funds digitally in household applications. Now, as Potter then says, it took Congress too long to get money to people, and it's too clunky. We need a separate infrastructure. Underline the word infrastructure. The Fed could buy the bonds quickly without going to the private market. On March the 15th, they could have said interest rates are now at zero. We're activating X amount of the bonds and we'll be tracking the unemployment rate. If it increases above this level, we'll buy more. The bonds will be on the asset side of the Fed's balance sheet. The digital dollars in people's accounts will be on the liability side. Did you catch that? Did you catch it? Now, that in a nutshell is how the Fed will stimulate the economy in the next crisis in hopes of circumventing the reserve creation process. It will use digital money apps, which explains the Fed's recent fascination with cryptocurrency and digital money. Digital money. To transfer money directly to U.S. consumers. To be sure, the narrative is already set for how the Fed will sell this direct transfer of money to the rest of the world and the broader U.S. population. What does the rest of the world have to do with what's going on here in the U.S.? The Fed will sell this direct transfer of money to the rest of the world and the broader U.S. population. The rest of the world, i.e., the other central banks in their network. As Corando explains, it's the most efficient from a form of macroeconomic standpoint in supporting spending and confidence. The fear of unemployment acts as an accelerant on a recession. There's a shock. People are losing their jobs or worry about losing their jobs. They get very risk averse. By getting money to consumers, you can limit the depth and duration of a recession. And the kicker, you could actually generate real inflation. It could be beneficial for not only avoiding negative rates, but creating a more healthy interest rate market, a more healthy yield curve. There's that big old phrase again. So there you have it. The one thing that was missing from a decade, you mean more like 20 years, of monetary tinkering by the Fed, the spark of inflation, will finally arrive as the Fed gives money to those most likely to spend it, the lower and middle classes of society. But wait, there's more. Now the Fed is implicitly focusing on racial inequality, and soon explicitly, with Joe Biden going so far as to urge the Fed to fight racial economic equality. And former Minneapolis Fed president writing an op-ed in which he said the Fed should have a third mandate on racial inequality. The stage is now set for the Fed to specifically release funds for those who have suffered from inequality. Sounds like reparations, doesn't it? And once the time comes when the narrative allows to deploy reparations on direct funding to minorities, the Fed will be ready. Reparation funding is being set up and implemented as we speak by the Fed. Yeah. 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 What's up? What's up? Next, the Bloomberg Markets interview with Corrado and Potter lays out very clearly just what the next monetary stimulus will look like. Now the helicopter money is fully engaged and money is about to be sent by the Fed directly to those Americans the Fed finds to be, quote unquote, in need. Bloomberg Markets. How would recession insurance bonds work? Julia Corrado. Congress would grant the Federal Reserve an additional tool for providing support, say a percent of GDP in a lump sum that will be divided equally and distributed to households in a recession. Recession insurance bonds will be zero coupon securities, a contingent asset of households that would be basically lie in wait. The trigger could be reaching the zero lower bound of interest rates, or as an economist Claudia Sam has proposed, 0.5 percentage point increase in an unemployment rate. The Fed would then activate the securities and deposit the funds directly into household apps. I hope y'all are getting this. All right. The Fed rate cuts are now deflationary. That is the nutshell situation here. Deal with it. Deal with it. This is where we are. But wait a minute, how can you do all that when ship orders are collapsing? Won't that give you the interest rate boom, the inflation that they're looking for? Let's find out. Now, pre-COVID, the bull case for shipping rates was all about plunging new build orders. Yeah, they were plunging. You look at that Baltic Dry Index, it was scary. A drop in orders in 2019 pointed to rising freight rates in 2021, given the lag between contract signing and delivery. Now, mid-COVID, the bull case for rates is even more about plunging new build orders than before. There will be a lot fewer vessels on the water in 2021 and 2022 and beyond than previously thought. Really? New data provided to FreightWaves by the UK-based Vassal's Value confirms that 2020 is shaping up to be an exceptionally weak year for tanker, bulker, and container ship orders. New data from the Alpha Liner shows that container ship new build capacity is down to just 9.4% of capacity on the water. For the first time in more than 20 years, the global new building pipeline fell below the 10% threshold. reporter Alphaliner on Wednesday, calling it a historic low. What about tanker, bulker, and overbooks? Well, according to Vassal Value, the tanker order book has fallen to 9% of the operating fleet in terms of capacity measured in deadweight tons or DWT as of July. This is down sharply from a high of 23% in January of 2016. Notice how we keep going back to 2016. 2016 was an enormously pivotal year that has gone all but overlooked by history. Seriously. So many things happened. And 2016 was a turning point, just like 2008 was, a turning point, and not for the better. The dry bulk order book is only 7% of the on-the-water fleet. This is down from 24% in January of 2015 and an even higher peak, 27% in January of 2010. Something weird about 2015 too, you guys. Very weird things happened there too. The number of ship orders year to date is extremely low. Vassal Value data shows just 134 tanker orders through July, 28% below last year's pace. Despite historically high spot rates, only 88 bulkers are on order. That's 31% below last year's pace. Clarkson Plateau Securities has released data for specific tanker and bulker segments. For very large crude carriers, the VLCCs, 200,000 plus deadweight, the order book is only 7.4% of the on-water fleet. For Sumaxes, 120,000 to 199,999 deadweight, it's only 11.3%. In the product sector, the ratio is just 6.5% for medium range, which is MR for short, tankers, 30,000 to 59,999 deadweight. It is 0.8% for long range one tankers, which ranges 60,000 to 79,999 deadweight, and 9.6% for LR2s, which is 80,000 to 119,999 deadweight. In the dry bulk sector, Clarkson puts the order book to fleet ratio at 10% for capsizes, which is 120,000 plus deadweight. It is 8% for post Panamaxes, 85,000 to 119,999 deadweight, and 6.8% for Panmaxes and Camarsar Maxes of 65,000 to 84,999 deadweight. The container ship order book, according to Alphaliner, the container ship order book is down to just 2.21 million 20-foot equivalent units, TEUs. This contrasts to a high of around 7 million in 2008. See how we're going to these pivotal moments in history? In that year, order book capacity was more than 60% of the on-water capacity. Of ships on order, virtually all are in the 10,000 plus TEU category or the 3,999 TEU or less category. There are effectively no orders. I'll say this again. There are effectively no orders in the mid-size 4,000 to 9,999 TEU category. Fear of premature obsolescence. Order books are evaporating for two main reasons. The first is regulation. The International Maritime Organization, known as IMO, has vowed to create rules to compel shipping to cut greenhouse gases emissions by 50% by the year 2050, a regulatory target known as IMO 2050. Owners don't want to order until they know the rules, lest their assets suffer premature obsolescence. As Star Bulk, which is traded on the NASDAQ under ticker SBLK, President Hamash Norton explained during a Maritime Money Virtual Forum in June, quote, what may be legal today may not be legal in 5 years. In the old days, ships were grandfathered in until the end of their usual life. Given the political situation, people are afraid, I think with good reason, that a ship they order today will not be grandfathered in and will become obsolete, end quote. What about the pandemic effects? The second reason for the order book shortfall is the COVID-19. Travel restrictions in the first half of the year made new build contracting extremely impractical. Furthermore, current and future economic fallout make it much tougher to pull the trigger on orders and get financing. If economic uncertainties can be measured by ship ordering capacity, then ship owners must be feeling completely lost at the moment, wrote Stifel analyst Ben Nolan in a recent research note. The pricing of secondhand ships is also undercutting the case for new builds. New build prices are at too high a premium to secondhand prices for most orders to make sense. Now, Stamatis Samatis, who is the CEO of Sea Energy, traded on the NASDAQ under the ticker SHIP, SHIP, explained during a Capital Link webinar last week that a secondhand 5-year-old capsize cost around $30 million, whereas a new build costs $50 million. The price differential is not justified by the incremental earnings of the new build, he pointed out. Now, here's the risk to rate upside. The IMO 2050 coronavirus 1-2 punch sounds like a guaranteed recipe for future freight rate strength, but there are no guarantees in ocean shipping. Following is a devil's advocate list of things that could go wrong. So, before we go there, are y'all following what's going on here? Basically, you would think that the slowdown in receiving goods during the lockdowns because, oh, everything's locked down, nothing's moving. That's what they would want you to think. But really, with these shortages and supplies, this is being done artificially by default because of the new laws that they're trying to place. They're trying to put restrictions on these shippers. So they're not moving product. I don't blame them. Would you? So your elected officials are doing this. This has nothing to do with the lockdowns. Has nothing to do with the coronavirus. Cargo demand could slip. That's the first thing. A multi-year virus-induced recession or depression could cut cargo demand as much or more than vessel capacity. This would erase owners' future rate negotiation advantage. Another demand risk relates to GHG emissions. If the world's governments are serious about forcing GHG cuts by ship owners, wouldn't they also force cuts to fossil fuel consumption? And if so, wouldn't this reduce future demand for tankers, bulkers, and gas carriers? Again, unintended consequences, you guys. How about shipping regulations are not a sure thing? Well, the IMO has no power to enforce regulations. Only IMO member nations do. The GHG regulations for shipping can only move forward if they're supported by countries with the most to gain from ocean trade and by the world's largest charterers. Again, your government, the governments of the earth are causing and creating this situation. Has nothing to do with the virus. This is their choices and decisions because of the fake climate change issue, because of that narrative. So the coronavirus changes the equation. Again, they're using this virus for a lot of damage and devastation in the world. One theory is that the cleaner post-lockdown skies and waters will drive momentum for environmentalism and GHG regulation. In this scenario, shipping decarbonization is more likely. Another theory is that the outbreak will spur an extended period of economic pain and geopolitical unrest. In this scenario, countries would focus on rescuing economies and keeping transport costs cheap, making shipment decarbonization less likely. If owners believe GHG regulations face significant delays or may not happen at all, they could lose their fear of ordering. Finally, orders may go forward regardless of IMO 2050 and COVID headwinds. If rates jump in 2021 and 2022 due to lower vessel supply, owners could decide to order regardless of the premature obsolescence risk on the belief that they'll earn sufficient returns before obsolescence strikes. This would limit the duration of the upcycle. Alternatively, if there is a deep economic slump due to the coronavirus and owners do not order ships, there could still be rebuilds, a lot of new builds. Commercial shipbuilding is almost entirely based in China, South Korea, and Japan. Asian governments could fill yard slots with orders by state-controlled ship owners tapping state-backed financing. This would not only preserve Asian shipbuilding jobs, it would also depress freight rates, a plus for economies that benefit from cheap transport of raw material imports and finished good exports. Economies like China's. Talk to a shipping veteran who has been around since the 1980s, and the conversation will often turn to the infamous Senko orders. In 1983, Japan's Senko Steamship Company placed a $1.25 billion order at Japanese yards for 103 dry bulk new builds totaling 4 million deadweight tons. The order helped Japanese yards but crippled rates for years. The fear, if orders don't pick up, is that an Asian shipbuilding nation will pull a Senko, most likely China. Again, the theme of this morning is unintended consequences. Actions always create counteractions, reactions. There's no getting around that, ladies and gentlemen. We're talking about unintended consequences this morning. All right, this is real. This is real. You got to deal with this. I've been covering this one too. You know, the $600 unemployment thing just went up in smoke this weekend, along with the moratorium that is going to create the landlord-tenant battles of 2020. You may recall the eviction moratorium that expired. All right. And this is about 4 months after the U.S. economy effectively shut down due to the COVID pandemic. Now, 33% of renters have yet to make their full payments in July, a recent survey showed. This means that 12 million renters could be on the cusp of eviction in a matter of months. Landlords are set to lose billions of dollars this year over the inability of tenants to pay rent thanks to the virus-induced depression. With much of chaos and disagreement on Capitol Hill about the next round of stimulus, nevertheless, no deal on a rent moratorium extension, landlords are now demanding back rent and August payment to boot. While the exact cause of the landlord-tenant dispute turned violent in Georgia Sunday morning has yet to have an underlying cause, one can only assume it might have been due to payment. Fox 5 Atlanta's Caitlin Pratt quoted Gwinnett County Police Twitter on early Sunday morning of a dispute between the landlord and a tenant. And Pratt tweeted, landlord-tenant fight brings SWAT to a neighborhood. Landlord faces battery, obstruction of justice, and terroristic threats. Man, The Gwinnett County SWAT team is currently on scene of a barricaded person on Ivy Point Court in Lawrenceville. The subject was taken into custody at 7:15 a.m. and there is no danger to the community. The Atlanta Journal-Constitution said the landlord was charged with battery after a dispute with the tenant turned into an hours-long SWAT standoff at a home in an unincorporated Lawrenceville. Now, agency didn't say what triggered the violent dispute, but as we speculated above, it could have been due to rent payment. Washington's inability to deliver the next round of Trump checks to the working poor ahead of August, as we've noted, a fiscal cliff was just ahead, has likely resulted in millions of folks skipping out on rent payments in August. Tens of millions of Americans were pushed into instant poverty by the economic downturn. Let's go ahead and say that again. Tens of millions of Americans were pushed, shoved, kicked in the rear off of a cliff into instant poverty by the economic lockdowns, which created a downturn. Many faces housing insecurity and homelessness as the labor market recovery reserves, which has led to millions of payment job losses, permanent job losses, not temporary. It has led to millions of permanent job losses. When you say permanent, it means it's not coming back. Once it's dead, it stays dead forever. Now, ahead of the recession, many Americans had insurmountable debts and no savings. Insurmountable debt with no savings, or rather no safety net if times got rough. One would assume confrontation between landlords and tenants on the subject of payments are set to rise, as tenants are on the brink of being homeless and landlords are having trouble servicing mortgage payments with rental income collapsed. A new battleground of the working poor and community organizing groups is set to transition from city streets to the front yards of those who face eviction. Here's a community organizing group called Stomp Out Slumlords, organizing on what appears to be a rental property of a tenant facing eviction in Chilham, Maryland. Stomp Out Slumlords organized a couple of dozen of folks. One day before August rent payment was due, held signs that said eviction equals death and slumlords. Okay. The group tweeted one post of a picture of demonstrators in front of a house that read, "Blank around, find out landlords." There was also demonstrators in New Orleans last week who blocked landlords from entering an eviction court. Demonstrators protesting evictions have blocked off both entrances to First City Court, which handles evictions on the East Bank for rents less than $3,000. Most New Orleans evictions are there. The new battleground is tens of millions face eviction could be on the front yards of rental properties with landlords. All right. Now you have to take this at its face value, and then you have to break it down. The thing that stands out here is demonstrators protesting eviction, blocking off access to the court. First of all, you cannot stand on government property, especially a courthouse, and block people from coming and going. Nah, that's not gonna happen, because the police will be called in and you will be blocked. Methinks this is something else going on here. Methinks that this is a way that the Democrats will get what they want. If they send out and tell all their people, look, man, don't do anything with the people protesting at the courthouse. All right, don't get involved. Don't do anything. Don't break it up, because then that twists Donald Trump's hands and Republicans into doing what the Democrats want by saying, if you don't do what we want, this is going to keep going. These protests are going to keep going. Your landlords are going to go belly up. See what I'm saying? So this is what's going on. And I'm here to tell you, few states are kind to the tenants in landlord-tenant court. Few states. Most states side with the landlord. All right? Always remember that. Landlord-tenant court is never kind to the tenant. All right? Now, the only thing that these people can do, especially those that say they have a slumlord, the only thing, no, here's what a lot of people don't know how to move in these areas, but you should know. All right, so here's what you do. If you live somewhere with a slumlord, all right, did you know you could go to the landlord-tenant court, report the landlord, and this is what they will do. They'll send out their people to go investigate. If the property is in violation of code, they will set up for you what is called an escrow account, where you go and you pay your money to the courthouse, to the landlord-tenant court. You pay your rent there. The landlord cannot touch or access that money until they bring the property up to code. And that is in majority jurisdictions, majority of states. Because the way the laws are usually written, they're mostly similar, but there are some variations based on the state that you live in. So what happens is, if the property is not up to code or it's in violation of codes, then yeah, you can go and you can do that. You pay your rent to the courthouse. That forces the landlord to bring the property up to code. All right, because then they can face fees and fines and stuff too on top of that. So you're still paying your rent, but the landlord can't access the money until they bring the property up to code. So most people don't know that they can do that. But yeah, you can do that. Your landlord can take you to court, but you can take your landlord to court too over that. And if like I say, if they're in violation, boom. It's a way to force their hand to make the appropriate repairs and stuff. But now here's what most people don't understand though. Anything that is not a violation of code, the court will not be on your side as a tenant, and they will not force the landlord to do anything. Here's some other things that most people don't know, don't understand. And there are some things that are considered luxuries and some things that are considered mandatory. For instance, if you live in a very cold climate, heat is not an option. Your landlord must provide heat. If they do not, they're in violation, and those can have serious consequences. Vice versa, if you live in a place that's very humid, very hot, AC is not a luxury. Your landlord has to provide the AC. All right, but in the Northeast, all right, you need to understand this. Heat is what's important. Southwest, it's about that AC, but they don't have to provide you no heat though. That's why you see these units sticking out the windows up north here. All right, because they don't have to provide you AC because you don't live in a desert-like climate. So AC is considered a luxury. So, but heat isn't. They got to provide heat though. So that's how that works. Now there's some gray areas in getting around these areas, especially when it comes to certain things. But for the most part, that's the way that rolls. Okay. Now, like I said, each state and jurisdiction, municipality, some will vary. Some vary a lot, and I mean a lot. But for the most part, the way it works like this with landlord-tenant court is If you're on a month-to-month, will determine a difference than if you're on a year-long signed lease. All right, most jurisdictions, after the year-long lease is up, you automatically revert to a month-to-month. And the way this has to work is most people like to sign a lease. Signing a lease gives you more of a guarantee than going month to month. Month to month has its advantages because if you know you're a mobile person, like if you're in a service or something or whatever, you may be called out or whatever, or for your job, you may be relocated for a long period of time or something. Then the month to month is great for you because you just give notice, boom, you're out. The only thing you would owe is your last month's rent. Okay. What most people don't know though is if you are on a year-long lease and you break that lease, the landlord could come after you for the remaining portion of that. Most jurisdictions though limit that to like 90 days and or until the landlord can rent the apartment to another person. And in some cases it's only 30 days rent regardless. Like I said, you have to check with your municipality to find out what those guidelines are. And you can Google that. Most counties are on the internet and they have the documentation there for you. Like I said, some are more tenant friendly than others, but the majority of them are slanted toward the landlords. Here's another issue for those of you who got the money but ain't been paying. All right, here's where you can get yourself in trouble because you don't know the law in your area. In most places, if you're on a year-long lease and you're late with the rent, I believe my memory serves me correct, it's 2 or 3 times out of that year, that rental year, then your landlord can file for possession, even if you pay the rent in full before you get to court. Now that's a little slick thing that most tenants don't know. All right, your landlord can still go to court and you can say, look, Your Honor, I paid. Let's go home. They will say, not so fast. Your landlord has filed for possession. Yeah, but I paid it. I was 3 months behind and I paid it. Yep, I understand that. But according to the law, you were late twice or 3 times within that 12-month period. So by law, they can ask for possession. Most people don't know that. Yes, they can ask for possession. So if you're 4 months behind and through some miracle you come up with the 4 months rent, and if it's thousands of dollars, you can give it to them, right? And it won't show up on your credit that you owe thousands of dollars to a landlord because you paid it. But they can still kick you out and file for possession, and pretty much 100% of the time they're going to get that possession. All right, and you're gonna be evicted. So what some people do is they say, well, rather than coming current, since they are filing for possession, I'm going to go ahead and I'm going to take this money and use it to relocate. But here's the catch-22 with that. Landlord-tenant, right? So most places, most people will not want to rent to you if you have rental problems in the past. And normally it's the near past. So if you just got evicted from your last place within the last 90 days, a new landlord is not going to be wanting to rent to you because you have a bad rental history. You were late with your money, you got evicted. They don't want to suffer the same fate. So they won't rent to you. Also on your credit report, especially it will show up on your tri-merge credit report that you've been late with the rent and you've had rental issues, you've had a judgment issued against you. Remember, your tri-merge credit report does have all judgments, tax liens, unpaid child support, felonies, if you serve time, all of that is on your tri-merge credit report. If you have a record, felony convictions show up on your tri-merge credit report. Bankruptcy show up on your tri-merge credit report. Foreclosures show up on your tri-merge credit report. Landlord-tenant late payments and judgments come up on your tri-merge credit report. All right. All these things show up on your tri-merge credit report. A lot of people don't know that. So you can lie and say, "Oh, I've never been a felony. I've never been arrested. Never done time." It shows up on your credit report. Okay. Now, of course, there are rules, regulations with how long certain things can stay up on your credit report. Oh, tax liens also show up on there. Some things fall off after 7 years. Some things fall off after 10 to 12 years. However, a lot of things can be renewed, like some of the judgments and stuff. Student loans show up on there too, unpaid student loan debt. Those judgments, depending on what kind they are, can be renewed for another 10, 11, 12 years. So that can happen to you. There's a lot. Like I said, you need to Google where you live if you're affected by this and find out what the processes are. Okay, so if you've already gone through the whole process, you went to court, you got judged against you, you still have some time. All right, you still got some time. You don't just go to court and then the sheriff come throw you out the next day. Depending on where you are and how backed up and busy they are, it normally takes at least a week or two, sometimes even longer, before you get the notice from the sheriff. What happens is the sheriff comes and puts a notice on your door telling you how long you have until they come, tells you the specific date that they're coming to throw you out. Now, you can leave before that time, which saves the embarrassment of them coming and evicting you. All right. So let's say you just don't have money, you have nowhere to go, you have nothing, you have nowhere to you have no money to put your stuff in storage or any of that stuff. You can't send it to a friend's house, none of that. What happens is this. If you're there when the sheriff does come on the day of eviction, they ask you to step out of the house. You can't go in and touch and grab anything. By law, they come in and take all of your possessions and put it out on the curb. You have to wait until that process is done before you can access your stuff. So, yeah, and that's usually, people don't normally like to get to that point. If they can help it, they'll bounce. They don't want to be there for that. So, yeah, man, this is a really big deal. We're talking about tens of millions of people, man. See, in this article, we're just dealing with the renters. But don't forget, there's foreclosure proceedings going on behind this as well. So the landlord's kicking you out, but he about to lose his home too. See what I'm saying? So we got a double whammy going on here. And it's not just renters and residential. What about the commercial people who are going to landlord-tenant court too? Okay? So this is a big vicious circle. The tenant is getting kicked out, but so is the landlord. See what I'm saying? In most cases. So this is a nasty, nasty, nasty storm that's coming, and it's unprecedented. Now, already in normal times, or quote unquote good times, landlord-tenant court is always busy. Landlord-tenant court, probably, I'll have to do some statistics, looking up on it, but I would venture to say that the landlord-tenant court is the busiest court in the world. Landlord-tenant court. I think it trumps the bankruptcy court by a small margin. But I think landlord-tenant court sees more cases per day than even traffic court. And I know traffic court is another one. Traffic court is a big one. Forgot about traffic court. I don't know. I think landlord-tenant and traffic court going neck and neck. They battling it out neck and neck. Because a lot of people have to go to traffic court. A lot of my wife and I, but even before we got married, what we used to do, when we go out on dates, one of our things we do? We would go down to the courthouse and watch cases. Those courtrooms that were open to the public, not closed, whether it be felony cases or traffic court or even landlord-tenant court. We would just go and we would set, and we would take a look at it. And I have to say, man, they get it in though. All right, they get it in. I don't want y'all to get this twisted. I understand COVID. I understand all of that and social distancing, blah, 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 yada, yada, yada. Please don't make the mistake of getting this twisted. Landlord-tenant court and traffic court, they get it in. And when I say they get it in, oh, they get it in. They get it in. It is not uncommon. I have seen it with my own eyes. Do you know some landlord-tenant courts in whatever jurisdiction, even the small little towns, can do hundreds of cases per day? You'd be like, how is that possible? Some may even hit 1,000 in a day. You'd be like, that's impossible. Judge can't see that many people. Here's what you don't know. The way it usually works is they have their the landlord will have their lawyers go on their behalf, and the landlord could have several high-rise apartment buildings. The landlord could have mad properties. I've seen it where darn near an entire high-rise apartment building like they were being thrown out. I'm not kidding. I remember this one lawyer, he came in, he had like a couple of books. He had like 300, and I ain't talking about no big city. I ain't talking about New York, Florida, California. I'm talking about Maryland, Montgomery County, Maryland, PG County, Maryland. I'm talking about, the country outskirts towns in Virginia. You know what I'm saying? I'm talking about, you would be surprised. You would be flabbergasted. But they're always swamped. They're always busy, but they get it in. They get them cases done. Make no mistake, they get it done. Now, I'll tell you where the issue will come in, though. We can't make no mistake and think that it's just going to be business as usual. The COVID does make it more of a challenge. But you better believe they are very industrious. I remember this one traffic court thing I went to, and it was so packed, and I'm not making this up. The courtroom was standing room only. And this was just a regular traffic court. Do you know what they did? And I never saw, they are industrious. The lady, I don't know who she was, if she was one of the magistrates or whatever, but she walked up front and said, "May I have everyone's attention, please?" And she rattled off a list of things. Like, if you're here for this, or this, right? Make a line, wrap it around. They wrapped it around the building, and you come see me. And she set up a little table and a little thing. And she was like, "If you're here for these things, come on, I'm gonna work with you. Today's your lucky day." And everybody got to walk. Everybody walked. Everybody walked. It was the most amazing thing I ever seen. They was like, "We got you today. Pay the little fine you got. That's it. Don't worry, no points, no nothing. Just come on around here. If you have the money, come pay your fine. Boom, you're done. Goodbye. Have a nice day." But then she was like, "Everybody else who falls into this, and this," and she said it out loud. She said, "You guys cannot leave. You just have a seat, because you on this list may perhaps," listen to what I'm saying, "you may perhaps be going to jail today. So you can't come up here to the desk." All right. So I was shocked when I saw that. And like I said, this courtroom was standing room only. And it was a decent sized courtroom. That's how many traffic. And people were lined up out. There was a crowd of people outside who couldn't even get in there. The courthouse steps was just a sea of people. You'd have thought it was a big, famous case in the media, and there was all media people out there. No, this was landlord-tenant court, inside of the courtroom, standing room only, a sea of people on the outside. The lady put up that little desk and said, "All right, we're going to," man, she moved a couple of hundred people through there, man. And within that 1 hour, it was just a procession. Boom, pay your fine. Boom, stamp it. Boom, there you go. Okay, bye. Boom, all right, boom, bye. Okay, bye. I mean, it was amazing. She clinked that whole joint out. But then the sad part was the people that were still setting. It was crowded. And those are all the people that were facing jail for the day. And I saw how they did them. You'd be surprised how they dealt with them. All right, so they call the first dude up. He getting hit with reckless and driving drunk or whatever the case is. Judge slams the gavel down. The bailiff comes and takes the person by the arm, by the chunk meat of the arm, and escorts them to this room where you see police with handcuffs out, ready to slap them on the wrist and take them to jail. Yeah, man. They get it in. And this was a country hick small town, man. They get it in. They got it in. We ain't talking about the city. PG County, Montgomery County, New York, Atlanta. Please. You don't think they're going to get it in? Landlord-tenant, man. Between traffic and landlord-tenant, I don't know. That'll be a good battle to see who can do the most cases in a day. They stay busy. So these evictions are going to happen. They're going to happen. These foreclosures, they're going to happen. Let me remind you of what happened in 2008. See, we've been here before with the mammoth foreclosures and evictions. Okay, so do you know how many foreclosures the country had to process in the 2008 situation? And do you know how many evictions took place? I will never forget it. On YouTube, man, it was hundreds, if not thousands, of people posting videos of that going on. You had ghost communities. I remember seeing pictures where an entire community was empty. So don't tell me that they ain't gonna be able to handle this volume. Oh, you better believe they're gonna get it in. The government will not be stopped. The government is gonna do what they do. That's why they got them courts reopened. They're not going nowhere. You may have a little bit of time on your hands, because of the volume and because of the COVID thing. So you may be able to skate for a little bit, but it ain't gonna be forever. Now I will say this: I have seen and heard cases with my own eyes. People be able to stay in the home up to a year to even. I think one case was 18 months before they got thrown out. And it's about foreclosure. That's how long it took going back and forth with so it can happen. That can happen, but that is not the norm. That is the exception, not the norm. Not the norm. So with the sheer volume, yeah, it's gonna be tough, but you got to put things into perspective. I would say y'all ain't got too much to worry about. Only if it was one court in the land that everybody had to travel to deal with things. Then it would take forever. You'd be staying in your house forever. That's not the case. We're talking about the same courthouses that get it in before the pandemic. These courthouses get it in. We ain't gonna skip a beat, America. They're not gonna skip a beat. The same volume they get in the normal courts, they'll just hire more people. They'll come up with very ingenious ways to handle it, and that's it. They're gonna get it in. Now, here's where the breakdown will happen. I don't think you're gonna be surviving landlord-tenant court because they get it in, and they don't schedule things far out. They schedule them now. You got court Friday. If it's Monday, you got court Friday. That's how they do it. Here's where the issue is going to come in. And I don't know how they're going to do this. Here's the issue, and I think this is what people are really talking about, but didn't know how to really say it. Okay. In the landlord-tenant court, the proceedings can be, they're going to go through that just like they normally do. Boom, 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 boom. Now, here's where the issue's going to go with the foreclosures and evictions, okay? Getting your day in court and getting the judgment is just one part. The next issue is, how are you going to remove the individuals from the home? This is where the breakdown is going to come in. Most sheriff's departments are little teeny tiny departments. It's the sheriff who comes and throws people out. You ain't got but so many sheriffs and deputies to go around. So that right there is where your time situation is going to come into play. Where you normally would have 2 weeks before the sheriff come after you go to landlord-tenant court to get the judgment, you may now have a month. You may have 2 or 3 months even, depending on your municipality. It's not that many sheriffs, and ain't that many sheriff deputies. So they're gonna be at capacity. That's all they're gonna be doing is that. I don't know if they will pull from the police department or what have you to help. They may do that. They may do something with the police and have them do some evictions. I don't know. I don't know how they're gonna work that out because you get your writ, what it's called a writ, and that's what it lands on the sheriff's desk, and then the sheriff schedules stuff, the eviction. So I don't know how they're gonna do it. I know way more about this than I ever wanted to, but because back in the day I used to do rental properties and stuff and all of that. Had a contract with the state, and we provided housing for certain individuals and stuff. So I know how this works. And that's the sad part. That's gonna be the sad part. You know what, Wiz? That is a good. I forgot about that, man. Yo, that's a good point. My man Wiz in the live chat says, "What about the auctions themselves? Can only schedule a certain amount." Yo, now that's a whole nother pickle. I don't know what they're gonna do about them auctions or how they're gonna do that, because you're right. That's part of that whole foreclosure process. And you're right with most traffic court cases can be resolved before the court hearing. Yes, and a slap of a court fee. Yep, you're right. So a lot of that, but by default, most people, if they get like, you got a moving violation, you got to pay a $30 fine or something. People just write a check, they pay it. They don't have to go to court. They just pay the fine. The only time you cannot get out of it and fines are involved is when they tell you have to come to court, and they will tell you what it is. Normally, the reason they say you can't just pay the fine and get out of it is because we probably gonna get assessed some points on your license, or you may be facing jail time. And usually they'll let you know. They'll say you may want to get an attorney. And here's another slick part too. I'm sure a lot of you have probably had this happen for those who've been in this space. If you do get hit with something like that where you may be facing jail time, normally out of the blue, you'll get a letter from an attorney's office in your area saying, "It's been I've seen one of these letters. It wasn't for me, thank God, but I've seen one of these letters. It says, you may it says, what is it? They say, it has come to our attention that you're facing a court situation where you may be facing incarceration. We're here to help. Give us a call." Because they know you need a lawyer, and these things, put on a database, and so the ambulance chasers will come at you, be like, "Yo, I hear you have a legal situation in which you may be facing incarceration. Let us help." So I think that was kind of slick the way that happens. But anyway, yeah, man, auctions, that's a whole nother issue. How they gonna do that? Because you got social distancing, you got to you got to mask up. Man, I don't know how that's going to happen, dog. That's a good question. All right, Wiz also says the waiting period for New Jersey was 9 months prior to COVID. So 54% renters are late currently. That's going to be 5 years. Yeah, I mean, yeah. Like I said, it's based on jurisdictions, whatever's going on in your jurisdiction. I'm just giving everybody the general breakdown. In general, this is what you can expect. In general, okay? Yeah, the courts are going to be a little overwhelmed because of the whole COVID thing. I don't think it's because, of the volume. Because the courthouses, I told you, I've seen it. They can be very industrious. And they reserve the right to do whatever. They can say for the non-serious things, they can send you a letter and say, look, man, you ain't got to come to court. Don't worry about it. But we do need you to pay this bill though. And if you don't pay this fine, then we're gonna have to suspend your license. They'll probably hit you with something like that, just to cut down on the amount of people that got to go to court. But people who are facing, I'm talking about what I just gave you the example. That was for driving court, traffic court. But for landlord-tenant court, they won't be able to do that because you literally have to come in and show up and fight your case. It's not always cut and dry either, you guys. I've seen things where you think that it was going to go one way, like, oh man, the landlord, he got this. I've seen it with a judge be like, whoa, now this right here changes everything. I'm going to file in plaintiff in favor of the plaintiff. So the landlord don't always win. It just depends on the situation. So, but 9 times out of 10, the landlord's going to get you. They're going to get the better of you. The court's going to file with them. All right, so I've been all over this, man. I've been all over this. We got a lot more coming. I got to talk about in the next couple of days. There's some things we do need to deal with, contend with, and we're gonna get it in. All right, we're gonna get it in. The main thing though is, man, with everything that we've talked about today, the real question you have to ask yourself is, if you're not being affected by any of this now, what happens when you do? What about when you do? You know what I'm saying? What if you do? That's what insurance is all about, right? We get insurance not after a situation. We get insurance to protect us in the event of a situation. You know what I'm saying? So, this is why you got to plan ahead. This is what prepping's all about. This is what learning how to trade the markets is all about. You do this just in case something goes down and you're affected. You might not think that you will ever be affected right now, but you can be. You can lose your job easy. I've seen people who I would have never thought would have been laid off, and they got laid off. The time to prep is before a situation arises, not afterwards and not during. So I'm saying to you guys, have you considered a secondary income stream? This is where trading comes in. I don't know any other method that can get you straight quicker and more consistently than trading the markets. Real estate is very slow and illiquid. All right, and can be even in booming markets. But trading is something you can learn to do, and you can fish for a lifetime instead of just waiting and depending on the government to feed you. You can feed yourself. Learning how to trade these markets will produce something for you that will last you a lifetime. You see me? You see what I'm saying? So think about that for those of you who have never done so. You don't know what tomorrow holds. All right? You're gonna want to not be at the mercy of the federal government. What are the best ways to do that? Is to come on over to PulseWaveTrading.com and learn how to do this. Let this be your new full-time job. Let trading these markets be your new full-time job. All right? This is good. This is for you. Oh, thanks for all the love, Brandon, man. I appreciate it. I do this for you guys, man. I am only as successful as my subscribers. My job is to help you make money. If I can't make you money, then what am I doing? That was my primary reason for creating Pulse Waves and the YouTube channel, and that's what I do here. That's what I do. So, wow. You hear what Brandon said? Man, that's dope. He said he's getting 1% return on investment every day with the PulseWave. So that doubles his current rent. That's what I'm talking about. That's what I'm talking about. And no, I did not pay him to say that. No, that's not my son, my brother. No, that is a real customer of the PulseWaves. Been with me for a minute. And we got dozens of stories like that. That's what we do here. It's not for fun. It's not pretend. This is real stuff, man. With that being said, I will see you guys back here for the end of day report. Everyone else, I'll see you on the trading room. And remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can and give nothing back. What that simply means is take what you can from the market in ways of profit and do not turn those profit into losses. Don't be greedy. And I'm out. Peace. Oh, Sean, thanks. Hey, see, and here's another one. PulseWaves have been killing the forex markets. That's what I'm talking about. That's what I'm talking about. All right, I'm out of here, y'all. Peace.